U.S. residents, if they purchase a property, they can apply for loans. They have a bank account, they have an income source from here.
Correct.
But as a foreigners, do I have to open a bank account first, or should I just pay cash? Or what can I do with the money situation?
Luckily, there are options. There haven't been options for a couple of years for foreigners buying because the banks have been nervous, even though the foreigners buying tend to be incredibly well-heeled, and they would be a great risk to take a loan on, of course. But at any rate, nowadays, some banks are really open to it, and it's usually a 60 or 70% loan to value. So they would have to put 30% or 40% cash down. Most people still do cash, but it's nice to have those options. And big banks, worldwide banks, like in HSBC, where we have connections with, will be able to assist in helping somebody get that. If they can prove their assets around the world, and usually they like to have assets with the company, it's not an issue. You can do it.
So you were saying it's the international bank. I should have an account already. The bank in future is going to finance my purchase. Should know me already.
They don't have to, but it is a little easier to do. And there are Chinese banks in New York that are open, very open, and we definitely have great relationships with those people. And I mean, I think, nationwide, there are different banks that are open to foreigners buying. You just have to have assets that can be proven, and you have to be willing to show some of your assets and perhaps income.
That is to say, I need to open my credit back. Because a lot of Chinese people sometimes, traditionally, they don't let other people know what is going on in their bank account. But if you want to invest in international, especially buy properties here, you're going to apply loans, you need to open for audit.
Yes, you're right. You should. But the one thing is you don't have to show everything, but something that shows you're a substantial person with assets, with income, or if it's just assets and you don't show income, or everyone has a different story. But something that shows that you're substantial and that a bank should want to be with you and support you and take you on as a risk and give you a loan.
Should I be worried about the price fluctuation, or can you give us a little bit evaluation of which part of the country in the United States or which city relatively the prices are more stabilized?
Well, we've seen New York City be very stable, and in a lot of reasons. There's only 25% of the market is condominium, and most of the buyers are sort of worldwide people, tend to be very wealthy, so there's not been a huge amount of foreclosure or anything like that. Then the 75%, which is co-ops, which most New Yorkers own, you have to prove that you can afford it. So again, not a big foreclosure there. I'd say New York. I think Florida is still not doing as well as they would like to do, and I'm not sure how California is doing either. Seattle seems to be, getting to the bottom. I think major cities are still good bets, but I think anything where you can fly locally into, directly into, makes sense. You have to do something. You have to have a long-term perspective in this situation.
So New York City actually relatively is more stable, more desirable because the price most likely to appreciate rather than
historically, yes, it's always been strong because everybody comes here. For example, you mentioned investment. If you were just to rent your property, it's a 12-month rental. It's always rental because you have the basis for business people, for everything going on in the city, that it's a stable rental. So you have things like that. And then, of course, you get a little bit of money return on your investment for rental, but really in New York, it's appreciation that you're looking at. And again, I think not to have an appreciation investment in your head of 1 or 2 years, have a 5 or 10-year perspective, a little longer, but it's a safe bet. It's like buying gold.
So it's not like you flip over to get quick money and not here. You need to really put your foot down to look at the property, have a long-term perspective.
It would be smarter. It would be smarter.